Hello and welcome to the Better Banking Podcast. I'm your host, Eric Foster, and behind the scenes is Producer Rune. Producer Rune, what lame, contrived comedy bit do you have in store for us today? That's enough chirping out of you, fella. The Better Banking Podcast is brought to you by Gain Federal Credit Union to fulfill our promise to share our financial knowledge for your financial gain. Now, as you know, I'm not the expert, but I know experts, and we bring you the experts to help you manage your money better. We've got useful information and resources you can count on, and we also share our insights on how credit unions work and how they differ from banks. That's quite a bit, so let's get started. Podcast, we welcome back our real estate lending manager. You remember him, it's David Kim. David, welcome back to the Better Banking Podcast.
Thanks for having me, Eric.
So we've talked about different mortgages and home loans. Can you tell us the difference between a home loan, a fixed rate mortgage, and an equity loan?
The mortgages are what you apply for and get when you're looking to buy a home. Equity loans are really designed for loans after you've already owned a home. For example, a home equity line of credit and our express loans will be considered equity loans.
And so for a member who has a home already and they've got their mortgage, they've got their home loan, the home equity loan can provide funds for like what? Home improvement, putting in a pool, fixing a leaky roof, that type of thing?
All of the above. So the home equity lines of credits can do all of that. You can also use it for, any type of emergency or, in some cases, people take a vacation with that. The other thing too is it's really good to have some type of emergency funds in the event that something happens unexpectedly.
We have two types of these home equity loans. One, I believe, is a fixed rate home equity, and the other one is a home equity line of credit. Can you tell us the difference between the two of those?
Sure. The home equity line of credit works essentially like a credit card. It's a lien that's secured by your home. Based on the loan amount that you're approved for, that is what you will have available. You won't be making monthly payments until you actually access or draw against the line, essentially working like a credit card. The one thing about the HELOC, it is a variable rate. It is tied to the prime rate. So your payments can go up or it can go down. So it wouldn't be a consistent amount.
And the home equity loan with a fixed rate is different?
Yes, the home equity loans that we offer are fixed for a certain period of time. The rate will not fluctuate until whatever term that you have is over. And that's when you pay it in full.
And so the home equity line of credit, or the HELOC, I believe you called it, that works like a credit card. So let's say, for example, I have a $50,000 home equity line of credit. I don't have to make a payment, and I'm not charged interest on that $50,000 until I actually use some of it or all of it. Is that right?
Yes.
Whereas the fixed rate product, the home equity loan, I would get that money right up front, and then I could use it from day one. But I'm being charged a monthly payment for that $50,000.
Yes, that is correct.
Well, good. We're done. No.
Can I interject?
Yes. Yeah.
You can tell me if this is an oversimplification, but it's basically a loan, so you can borrow money for whatever you want, but the collateral is the house that you're living in.
Yep, it's secured by their collateral. Correct.
And the reason you would do that is because compared to a personal loan or a credit card, you're going to get a better rate using your house as collateral.
Well,
overdid it.
In an oversimplified way, yes. I mean, the true advantage of having a HELOC right now is it's great to have a loan knowing that you can access it in case there's an emergency for something unforeseen like an accident.
I know one member who uses the home equity line of credit exclusively for home improvement. And then that way they are able to provide an itemized list directly to their tax preparer. And there's no questions and no doubts about it. These were for home improvement.
Being able to use the HELOC versus another loan when it comes to home improvement projects is you can itemize what the expenses are, and there could be a tax deduction. But the other thing too, it gives you control, because you don't know really how much these home improvement projects can be. They could kind of sometimes go a little bit above what they normally bid you. But then the other thing too is if you decide you want to tackle another part of your home and add another project, you now have this home equity line of credit that you applied for. That's a pretty bigger amount, and you can access the funds from that as well.
What other uses do the members use their home equity line of credit for?
Paying off other high interest rate debt.
So you can use the HELOC to pay off, let's say, a higher interest rate credit card that you have somewhere else and thus save money.
That's correct. They can also build a pool, do other home improvement projects.
Fixing a leaky roof or redoing the driveway, redo the backyard.
Yep, all of the above.
So using the HELOC to improve your home helps with the value of your home as well. So the HELOC can actually help you increase the value of your property. Is that right?
Yes, and that's actually what it was originally designed for. If you've been thinking about adding a room or an additional game room to your house, you can use that funds. And definitely, anytime you add square footage to your home, you are going to be adding value to your house.
And curb appeal. That's something I heard on a TV show.
Get to know Independent Advantage, the better banking class for teens. Here at Gain, we offer a series of financial courses for high school students. Our courses are set in a relaxed and fun environment where we teach students about modern financial concepts. Our IA graduates are set up with real-world tools for real-world finances. Enroll your teen or know more at gainfcu.com/IA.
Are there any special deals that we have at the moment? Any special rates, any special offers that we can tell the members?
Well, for a limited time, we actually will be offering a low 1.99 promo rate. So members have a period of 6 months to take advantage of the 1.99 to do what they want to do.
Producer Rune here, and David just reminded me that it's a good day to add a pool, fix your roof, take a trip, retrofit, renovate, or pay down debt. And you can do all those things and more with a home equity line of credit, also known as a HELOC. And right now, you can get a rate that's almost impossible to beat. It's our introductory rate of 1.99% APR that's good for the first 6 months. To know more, visit gainfcu.com/HELOC. That's gainfcu.com/HELOC. APR is annual percentage rate. Now back to the show.
Tell us, what do I have to do to apply for a loan? Do I have to come in? Do I have to make an appointment? Do I have to sit down with someone?
So we do everything we can to accommodate our members. Most of the times our members will go to our website and they can browse their home loan section. There is an apply link that they can click on to start the application process. But if you want to come to a branch, you can always come down and see one of our loan originator processors, and they will assist with a physical application.
And how long does the process take? Let's say I fill out the form and I hit submit. How long does it take to get my money? Does it happen like in the next hour?
I wish that was that quick. It really depends on how quickly you provide the information that our processors are going to need. But the application process is pretty simple, as long as you know the basics of some of the things that we ask for, like your name, social, address. But once your application is in, it's assigned to one of our processors, and they'll usually respond very quick. And once we get all your information and we order an appraisal, shortly after that.
What other types of information are you going to need?
Income documentation, and depending on the type of loan and the amount, it could get a little bit more in detail. We will order an appraisal, and depending on the loan amount, it can be a mini appraiser, which we call usually like a desktop, or a full appraisal, which we'll have to have an appraiser go out to the home, inspect it inside and out. We will order a third-party services that validate you are the owner. Usually those things will happen pretty quickly, and we get the results early.
There's also a tremendous amount of resources and information about home loans and home equity loans on our website. Just click under loans, home loans, and there's a whole glossary of information along with the application to apply for the loan right there in front of you on your computer screen. So David, from your experience working here, how are credit unions different than banks, and why are they so much better?
Credit unions are not for profit. So our sole purpose is we're not looking to make a buck off of our members. And anytime we save money for our members, we actually reinvest back into membership in form of promos and rate reductions, etc. So there's a lot of things that we do for our members, and that's as a result of us being a not-for-profit.
Anything in your mind that makes Gain unique amongst credit unions?
the big thing is it's our money. A lot of the members that apply with a home loan, home equity, or, HELOCs, most of the time we give them the loans. There's really, sometimes there are things that might not fit at other places, but we do everything we can to make sure that we can get the members what the right product they need. We also educate them to let them know that maybe they came in to apply for an express loan, but instead, the HELOC was the better benefit for what they were going to be doing.
David Kim, thank you so much for coming to the podcast and sharing your knowledge with us. Will you come back?
I sure will.
And that's all for this episode. Please send your comments and questions to podcast@gainfcu.com. And be sure to subscribe and leave a 5-star review on Apple Podcasts. Once again, thank you to David Kim, our lending manager in real estate. And we also want to thank producer Rune, who is, as you know, in the control booth. How are things in there now, producer Rune?
Oh, everything's great in here except there's a police officer here, and he's asking me if I've seen this boy, and the photo that he's holding is a photo of me as a child. Should I be worried?
And be sure to join us next time because, as you know, there's a lot more to gain.
The views and opinions expressed by hosts and guests of the Better Banking Podcast are not those of Gain Federal Credit Union. Gain Federal Credit Union is insured by the NCUA and an equal housing lender. NMLS number 407810.